G'day expats, welcome to another episode. As always, I'm joined with my co-host, Jeremy Harper. Good morning, mate. How are you?
Good morning, James. Very well, thank you. Friday, the 20th of March. We are touching base after the big meeting recently. Was there some news that we need to talk about?
Absolutely, and we did predict it. Well, I know I predicted it. Big RBA rate decision. And gosh, there's been a lot going on. There's been a lot going on in world markets, obviously the Middle East conflict. And I think we were pretty confident that we were going to get a RBA rate decision increase, taking us all the way up to 4.10%. So we
Yep.
thought we'd unpack that today, unpack a little bit of the data that came out that supported that. I guess the unemployment rate, and then just what the market's actually already predicting for the next rate cut, which is just before the May budget.
Yeah, so we've got a bit of news to come out in the next couple of months. So it's very hard to sort of catch a breath with all this information coming out. But we just had, as you said, the March meeting. So they've increased it by 25 points, taking the cash rate to 4.1%. For
hmm
me, I think the biggest takeaway was the decision. So we know that there's 9 members on the board. They've basically split their decision 5-4. So
Mm.
the majority was to increase by the 25 points. But interestingly for me, the four have said, let's hold and see what was going to happen with data coming up. And if we think
Yeah.
about the February meeting, that was unanimous. So that was 9-0 that voted to
Yeah.
increase. So for
Yeah.
me, that gives me a bit of insight to think, I know the market is potentially pricing another one in the May meeting, but I think that depending on what's going to happen next couple of weeks, there may be a hold coming up in the next meeting just to take a deep breath.
Yeah, I mean, the way I can interpret that with that 5-4 split, I think a bit of uncertainty from obviously the four that didn't say yes. The five are probably looking at everything that's going on in the Middle East and probably predicting and future forecasting about the flow and impact of energy going up. And that can extend to a lot of different things, but the easiest that we're all seeing right now is petrol. When we're going to pay for petrol, it's hasn't doubled in price yet, but it's about to. And then gas will also go up. So we know that that's going to hit the bottom line of inflation. Inflation was already too high, 3.8%. So that obviously what drove the February decision. But now if they're just trying to predict, okay, inflation's still going to track up because of this Middle East conflict. And we saw that back in 2022 when the Russia-Ukraine kicked off. That was inflationary. So this is definitely inflationary given the amount of oil and gas that comes out from the Persian Gulf and nothing running out of the Strait of Hormuz right now, unfortunately.
Mm.
So I think the five that voted, they're being quite sensible there. They're trying to get ahead of the likely flow-on impact that inflation is going to trickle down into the economy in the next coming months. And I agree with the decision. I know obviously a lot of clients won't like it. A lot of investors, a lot of property home owners, a lot of first home buyers as well, which
Mm.
probably have lost a bit of that serviceability now with how they're priced in with a lot of lenders. But I do think it was the right decision they made.
Yeah. And there's the macroeconomic projection is that if what's happening over in the Middle East goes on for some time, they're forecasting an additional 1 to 1.6 percentage points of
Yep.
inflation. So
Up,
that's significant.
above five. Yeah, taking us up above 5%, probably by I would say, what month are we now? March, probably towards June, July, maybe a little bit later. But as we know, these interest rate increases, much like the cuts, that they take a little while to actually hit the economy, like filtering all the way through mortgage payments, those sort of things. So we don't see the impact of these rate increases for probably another 1 to 2 months at a minimum. Um, but they need to do it just to try and get ahead of it. Otherwise, inflation could run away very quickly. Uh, I agree with your comment there around the Middle East. I think this is going to be a bit more protracted than we initially thought.
Yep.
I think everyone was thinking a couple of weeks, given the attrition rate of a lot of the missiles that we've been firing and drones coming out of Iran. But I think now it's a case where this might actually go on for a couple of months. Have to wait and see. There's plenty of news coming out every week, definitely making it for very difficult for share markets to price in. And that's why share markets are sort of pulled back a bit, sidestepping just to see what happens in the meantime.
Yeah. Interesting. The notes that came out from the meeting, they referenced that the 2025 rate cut cycle that came through, we had the three cuts, are still working their way through the economy, which I thought my takeaway on that, that's looking in the revision mirror a bit. I don't think that's totally accurate. I think if that's the case, and if they're looking at uh, the lens of a 2025 economy when they're making decisions in 2026, I think that's, for me, something to kind of be a little bit concerned about. I know we've talked about this previously around, obviously, we talk a lot about monetary policy. Fiscal policy is the other side of it, right? And we've got the budget coming up.
Mm.
And I
Yep.
think we even talked about this around what happens if we get to a point where they increase the rates and the government sort of caught behind the eight ball, flat-footed. And I feel like we are getting to that point where the economy is moving. So
Mm.
we're increasing, but has the government responded to that with their policy? What do you think is going to happen this next budget? I know there's a lot of talk around CGT and negative gearing, but let's be honest, all of that is not going to have any impact on inflation, really. It's just, I think it's appeasing some of the voters out there, but I don't see it's going to have a material impact.
No, I unfortunately the government always used the budget announcement in May as and depending on how the economy is tracking inflation and maybe what the government spending has been as well, but they they are very comfortable with blaming the RBA.
Mm,
RBA has always been a really easy scapegoat for the government in power at the time. So I think there'll be a bit of that. Unfortunately, I think you'll hear that from Albanese and Chalmers saying, "Oh, the RBA they got it wrong. They shouldn't have gone down as far and should have gone up quicker." And where conversely, we look on the other side, it's like, well, hang on, look at all this
mm,
government spending the last sort of 6 to 12 months. That's inflationary. Like you need to reel it in. You're spending money we probably don't have. And then when we go into this budget, we know that they're going to be playing with a lot of the tax side, especially around capital gains tax. I don't know if that's going to really move the needle in terms of the revenue needed. But we know that there's definitely going to be some changes, certainly around the tax. We just don't know what they look like at the moment, unfortunately. Might reduce income tax rates, increase tax you pay on capital gains, maybe play with GST. There's always talks of playing with GST. But they haven't really fed that out to the public to see what the feedback is. So it's a bit of an unknown, but we know CGT is definitely on the chopping block at the moment. Just don't know what
yeah.
form it comes in.
Yeah, I just think, they could be a lot more proactive. As you said, when they had that previous spike in petrol, then
Mm.
they dropped the excise as a
Mm.
response to try and give people a bit of relief. That could have easily been in place by now. So yeah, definitely, I think definitely behind the eight ball with some of these policies.
Yeah, we'll see what the fuel task force does that they've just announced and now allowing dirty fuel in Australia where it's got more
Okay.
sulfur.
Just
So
just what we need, another talking round table. Yeah.
not sure what
Get all the
not sure what
states in.
the not sure what this dirty fuel does to that. What was the goal? The net 30 goal or net 50 or whatever it is.
Yeah.
So that's yeah, just goes to show they can be flexible. But the economic data, unemployment was a bit of a
Yep.
surprise. I think that sort of was a bit of a not caught everyone off guard, but I think the data that came out this week was a bit of a surprise.
Yep, very, very fresh, just came out yesterday. So we had it, the rate now has it's increased to 4.3%. So that's up
Hmm.
from 4.1% in January. And the market was expecting it to remain unchanged at 4.1. Now,
Yep.
the employment actually increased by nearly 50,000 jobs above expectation. But if you dig into that, you can see there was actually 30,000 full-time positions disappeared. And then there was nearly 80,000 part-time that was brought into the
Mm.
economy. So hence it's been added. But if you look at the mix of that, and then, if you look at the definition of part-time, that might be people working very minimal hours. So versus someone that's in a full-time position. So yeah, I guess that will feed into, no doubt, the RBA we're looking at pretty closely the next meeting.
Yep. Yep. Yeah, I think so. I think the when we get that monthly readout on March next month, which I think comes out just for the RBA meeting, I think the RBA will probably pause because they've just gone 0.25, 0.25.
Yep.
Um, I don't know if the fact that we're having the budget in May will play into that at all. Usually they'll try and not have a decision before the May budget comes out. But I think if that inflationary figure that pops out for April or say March, I should say, as a month is really ordinarily, then it's probably like they will have to go up again and just to get ahead of it. If it's gone up above 4%, then they're probably going to have to push on it.
Yeah, yeah. Funny you say that about, February, and then we had the next meeting. I got some snail mail from my lender and opened it up, and it was saying, your mortgage has changed, and I just assumed it was it was actually related to February. So it's moving faster than they can get out in the Australian Post. So
It
it's
is at
quite,
the
by the
moment.
time you get it, that's old news. Now we're focused on what they decide to do in March. So yeah, it
That's
has
right.
moved very quickly.
Yeah. And then what's at the moment, because you're obviously closer to it than me, what's the fixed rates looking like at the moment?
So they've all increased. Well, so they started to increase before Christmas, and then
Hmm.
the banks have been increasing them sort of ad hoc over the last few weeks. So,
Yep.
at the moment, sort of 2% fixed rates are looking around that for investors, around that sort of 6% mark, 6.1. So
Yep.
now if you do look at a fixed rate, you still are locking in an interest rate that's higher than what you'd be getting on the variable. So
Yeah.
now, unlike when we went through COVID and we had those really cheap fixed rates, it was
Two to three.
pretty
Yeah.
straightforward. But now you're actually saying to yourself, okay, am I happy to lock in a higher interest rate for certainty versus what I'd pay today?
Yeah. Yeah. And I think, I know a lot of my clients, they're riding the wave at the moment. I think there's probably still maybe two more in it, two more
Mm,
increases, total of 1%. I think the RBA rate tracker at the moment is pricing something different to that. I think it's a little bit less than that, but I just know what the impact would be if they let inflation run away from us, and unemployment rate goes up, inflation gets away, raising interest rates. It's such a blunt tool, but it does
yeah,
work. But if it gets really bad, then it puts the economy into a recession. But it's hard to see that switching gears so aggressively. The December figures that came out on the economic growth of Australia, the GDP figures was huge. It was the quickest the Australian economy had grown in probably the last 4 years. So can't see that reversing into a quick recession or anything time soon. Unfortunately, a lot of that growth was caused by government spending, so that can probably be cut back a bit.
yeah.
But that was then feeding into the private sector as well. So, yeah, going to be interesting to see how that one tracks.
Yes, yes. And then just to wrap things off for today, wanted to talk about leading into that point about fixed rates. We have a question, or I've had a few questions come in from expat listeners and clients, just to what you're saying. Should I be fixing my mortgage now or keeping it variable? And I think it's not necessarily just a question around rate. It's about what you want to achieve. And, number one, what's going to help you sleep at night? For some
Mm,
people in this environment, it depends on where you physically are. If you're listening to this and you are in the Middle East, maybe you just think, what, I just want to fix them in because I want to know what I need to pay for the next 2 years. I don't care about
mm,
anything else.
yeah,
Fine, but you do need to consider all your options, flexibility. Do you need to move the loan in 12 months time? Do you need to, access offset accounts, things like that? You do lose a bit of flexibility with a lot of lenders if you do fix it in. So, firstly, what's going to help you sleep at night? And then doing your own budget. I think that's really important. Understanding what your monthly burn rate is, like what's your outgoings today, and then if rates do go up and you're on a variable loan, so what does those outgoings look like with a 50-point increase in interest rates or a
mm,
1%? Is that still fine, or do you need to make adjustments? So definitely, understanding your numbers first to help you digest what's happening around you. Because I think I'm starting to see it's a bit like COVID in again, instead of running out of toilet paper, running out of fuel. But during COVID, people started to really spin a bit about what's going to happen next 12, 18 months. So
yeah,
I just think take a deep breath and do your budget and work out that, because that will give you some numbers to kind of digest and then say, okay,
yeah.
that's my outgoings. Do you know what? Things will be okay if rates go up another 1%.
Yeah, if you definitely manage what you're spending, so have a really good understanding of what's your outgoings each month, even though these interest rates are going up and you're a homeowner, have your own mortgage, it'll give you comfort just knowing, oh, okay, like I've actually got plenty of froth here and therefore I'm not too worried about two or three more increases because I can weather that. If you
Yep.
can't, then it's a case where you need to make some obviously concessions within your spending and pull back
Yes.
things, pull back on the smash avocado, pull back on the 3 or 4 gym memberships, which you use only one gym. So why have you got three? Because maybe you're
Yep.
too afraid to go in and cut that membership. All those sort of little things all add up, especially over a 12-month period. So cutting the fat.
hiding the fat, adjusting the lifestyle. I think sometimes Australians forget we've had it really, really good for a long time.
Mm.
And it is very common for people overseas. If you spoke to someone in other countries, they've probably made really substantial changes to their lifestyle across the journey.
Yeah,
So it may just be the
absolutely.
time.
Yeah, absolutely. No question at all. But yeah, interesting times once again that we're living in with everything going on in the Middle East. But hopefully we get some more updates about how that's tracking in the coming weeks. Hopefully a resolution isn't too far away.
Yes, that'd be great.
Easy.
Fantastic. All right, James, thank you very much for your time. Thank you, listeners. That's another episode for today. Stay tuned. We've got seminars coming up, so please make sure you subscribe to our newsletter to stay across all upcoming events. But until then, have a great day.
Thanks, guys. Thanks for tuning in. See you, mate.